Hello, it's Adil bringing you a review of the European and UK markets. I'm going to do a quick rundown from an intermarket analysis perspective and tell you exactly what my thoughts are at this very moment in time, given the flush obviously overnight on the US markets. Okay, it started from the Shanghai rally being down overnight, although that was negated somewhat with stronger German data. Obviously, talk of QE, then we had Evans basically on the podium, and he was talking up QE4 potentially, stating that they had more tools, etc., etc. Very, very dovish talk, and then everything took a turn for the worse after the durables goods data that came out. I think it was minus 1.4%, basically negative, much more negative than everybody expected. Obviously, the stronger dollar had an impact there, and the markets obviously did a drastic U-turn. And also there was apparently some comments from Lockhart, who sounded very hawkish and obviously negated the previous dovish speech from Mr. Evans. So it's very tricky and hard to keep up with these markets. So it's certainly an interesting fundamental backdrop. So given the fact also that the euro at the moment is, even though Mr. Lockhart was very hawkish, the euro certainly is holding its own, so it's very impressive with regards to the euro. The Aussie and the Kiwi, obviously, they got a beating with the weak, obviously, durable goods data, so it basically means weaker US growth going forward, and that obviously doesn't bode well for the Aussie and the Kiwi. But having said that, the oil price obviously has reached the $47 level. Given obviously the uncertainty in Yemen as well, so you can certainly attribute it to the rising dollar. So any geopolitical concerns, such as Yemen, obviously causes the dollar to appreciate, and that certainly has helped. And given the uncertainty with regards to supply concerns, given that the president's obviously run away, or the PM there, or whoever the dictator is, there are always dictators in the Arab world, unfortunately, and supported by us, which is a shame. Either way, he's obviously fled and bolt, and the threat to supply obviously raises a question with regards to the actual price of oil, obviously being moving higher. Now I can bring up a chart, the oil price, and given the fact that the S&P and the FTSE are quite obviously influenced by the price of oil, it's important to keep an eye on the price of oil at all times. So that's basically where we stand with regards to oil. As you can see there, we've almost hit the $49 level on my crude oil futures contract. So very impressive thrust higher. Okay, very important thrust higher on the price of oil, and that's what's kept FTSE alive as well. So I'm going to discuss the FTSE, and obviously I will be referencing it back to the price of oil. And with regards to the FTSE 100. Okay, so that's the backdrop. Weaker US data obviously sent the market into a frenzy, given the fact that everybody seems to be fixated on this concept of raising rates. The economic data obviously confirms that we are not going to be raising rates, regardless of Mr. Lockhart has to say. I think Mr. Evans' concern and his view certainly is shared by many in the markets, and those that are obviously quite intelligent as well. So we'll see. It's basically argument for and against at present, and there certainly is a concern with regards to a strong dollar, given the fact that the ECB obviously is doing QE. Okay, so that's going to be very interesting going forward. Either way, it's an argument for and against, and the argument will continue day in day out, given the fact that the Fed is now obviously focusing on the word prudence. Now I'm just reading at the moment, Saudi military incursion into Yemen could trigger Iranian occupation of Iraqi territory. Think about the repercussions. That's quite interesting, given the fact that the Saudis are obviously that's something that a lot of individuals haven't focused on today actually as well, and that's something that I obviously missed myself from a trading perspective, is the geopolitical ramifications of Yemen. Okay, given the fact that the Saudis have obviously been amassing their troops on the border, if the Saudis obviously if the Saudis occupy Yemen, then the Iranians will potentially basically it creates a war, doesn't it, basically? And the threat to supply, or the supply of oil, obviously can be a major source of indecision and uncertainty in the markets, and that obviously may well have exacerbated the sell-off today. It'll be interesting to see exactly what happens tomorrow, especially with regards to the Nasdaq. Okay, so let's see where the European market is, given the fact that the euro is currently still trading at the 1.0970 level. If the dollar does start to rise, then expect the euro to fall, and that should help European equities. Now, the dollar index at present is set up to rally. As you can see here on the daily chart, it's certainly set up to rally. Its previous resistance equals support. It's higher highs and higher lows. So it's basically a textbook style of pullback. And then the thrust higher continues, especially given the uncertainty in Yemen, obviously, that we already know, the price of oil moving higher, etc., etc. Now, I did explain to you that we are going to bounce here, given the fact that we're into gap fill support and that the H&S formation has been completed. So, given the fact that you have a H&S complete, it usually creates a short squeeze thereafter, and obviously focuses the market higher. Now, we've stopped making lower lows, lower highs. We've obviously put in a double bottom, and the 200 MA has certainly held well, as you can see there. Very impressive. We do have an unfilled gap below, so one must be wary of that. And given Mr. Lockhart's obviously comments as well, also given the weaker economic data that came out today, should have sent the dollar down and didn't. Okay, so that certainly is something to observe. And the reason why that didn't occur, obviously, like I've explained, the uncertainty in Yemen and the oil price rising, obviously, and that creating a risk of a scenario. Okay. So a very interesting observation. That's probably what exacerbated the sell-off in the US markets, and we'll see exactly how that's interpreted on the morrow in the European markets. Now, the actual European markets now, let's go to the technical side of the equation and let's discuss that. So the German DAX on a daily chart still remains within the bullish channel. The economic data today was very, very impressive. Okay. That certainly cannot be ignored. Very, very impressive economic data today. Expectations 103.9 as current assessment, higher. Business climate, higher. So everything hunky-dory. And if you look at the daily chart, it's an inside bar. Okay, inside bar, lower channel, everything is go with regards to the German DAX, and it's certainly bullish from my perspective. Okay, so just bullish consolidation, and obviously stronger economic data supports that. There will be a concern with regards to the Nasdaq obviously being flushed overnight by almost 100 points, but in the larger scheme of things, it has been factored in now. Subscribers know that I went long. The DAX around the 11.845 region, 4.7 region, 4.8 region, and currently I'm currently almost plus 20 points at the moment, but the target is certainly higher, and I expect this market certainly to stabilize and hold this 11.814 and 11.860 region. Certainly looking for a potential thrust higher. Okay, so 60-minute chart, you are in a symmetrical wedge pattern, as you can see here. We have broken down, so that is a concern. Okay, we certainly have broken down, so that is certainly a concern from a technical point of view. But given the fact that the fundamentals have strong economic data and supports the DAX, the Nasdaq is obviously into support as well. So we have horizontal support here at gap level, which is around the 11.860 level. If you move lower, you have this diagonal trend line that needs to be respected. Obviously has been respected thus far at 11.830, 11.840 level, hence the reason why I've gone long and looking for potential gap fill and higher around the 11.900 region on the morrow. Obviously if we do move lower around the 11.830 level, depending obviously what happens in Asia, then gap fill 11.865, 11.900, and this purple trend line will obviously all come into play, okay, on the German DAX. So very important to observe that. Now we can always cross-reference that with the CAC. Okay, so if we go to the CAC on a daily chart, I'm trying to do this as quickly as possible, folks. I need to get some sleep because the India versus Australia World Cup cricket match is on at 3 in the morning, which I need to get up for. Okay, so bullish channel still remains intact. Lower channel support, daily chart, nothing really to worry about from that perspective, especially given the fact that we were talking up QE today. We had an individual known as Mr. Likkonen and another chap basically talking up QE, and also the situation in Greece certainly seems to be more positive, given the fact that they're talking about Greece having access to QE from July 2015, which is a very interesting and also very positive for the actual index. Okay, so 60-minute chart, yes, we've broken out this rising channel. We are into support, so solid support around this region at 5010. You've got previous resistance equals support at 5005. If that breaks, then you have support at 4980, and obviously a 200 MA just below. But the 5000 level certainly should hold for now, and then obviously we'll play as we go along. Again, as Mr. Allen states, prudence. So we'll be prudent too. Okay. So 60-minute chart, as you already know, these are 5010 is its support level. Now this is a very beautiful setup. I did get stopped out on the Euro stocks based on this pattern. Okay, we had a falling contracting wedge pattern making a base, and we failed to hold given the fact that the wild card, and we know now, exogenous variable shock number one was the US data that came out, which was worse than expected, and also the situation in Yemen obviously has created uncertainty and fear in the stock market as well. Okay, remember geopolitics is very, very important and very crucial for the for trading the markets. Okay, one must be aware of the events and the impacts and the repercussions that it can have. Okay, so diagonal trend line is certainly active here, certainly will act as support. We have the horizontal support level here. Okay, and we have here, so we have 5005 and 5015, and then obviously we've got the pivot low over here, which is at 5000. So 5000 level certainly is a solid support level, and that will certainly give me the ability to go long, and give me an idea to go long. Potential move back up to the 5040 region. Okie dokie, that's the French CAC. I've given you an insight there with regards to the French CAC on multiple time frames, so observe them and certainly be aware of them on the morrow. Now the Euro Stocks 50. Okay, bullish channel intact. I have nothing really to worry about until this channel breaks from a technical perspective. I've explained to you what I think from a fundamental perspective, so just giving you a technical insight here. The daily chart, you can clearly see we're holding, so everything is honky-dory. 60-minute chart of the French CAC. I'll give you an insight as we load. Here we go. Okay, so we have this diagonal trend line, which we have support around the 3670 region, so that should be solid support. Okay, if that gives way, given the fact that the US markets, bear that in mind, have flushed overnight, we certainly need to respect that aspect of it. You have previous resistance equals support in this region here. Okay, which is 3650, then obviously horizontal support below at 3640, then 200 MA, which coincides with horizontal support resistance here. We do have one below, but that's not invalid for now. Okay, so you also have previous resistance equals support. So solid support are anywhere between the 3630 region to 3650. Obviously, that's if this diagonal trend line is going to break, and we also have this pivot low here on the 3680 level that certainly needs to be respected. Although on the upside you have held that resistance at 3740, so should be interesting how this market turns or plays out tomorrow. From my perspective, the Kool-Aid is certainly active, and that should certainly keep the markets alive. Okay, certainly what I'm expecting to occur. Okay, right, let's observe the next pattern now. Okay, so let's go to our daily chart. Okay, so the 10-minute chart of the actual Euro Stocks 50. Okie dokie, right, so the 10-minute chart, as you can see here, certainly is under immense pressure. One needs to observe with regards to the price action. Okay, so I can get rid of all those lines now, clean this chart up hopefully for you to give you a better insight. Okay, so you have this gap level just below, which is around the 5670 level, so that certainly needs to be respected in terms of the Euro Stocks. You have a pivot low support around the 3670, so 3675, 3670, solid support. If that gives away, then you have horizontal support around the 3645 region on a 10-minute chart basis. Okay, that's basically what we're looking at from that perspective. Okay, now we move on to the FTSE 100. Give you an insight with regards to the FTSE. Okay, so daily chart, we seem to be holding that resistance level. Okay, so that certainly needs to be respected for now. You've obviously put in a potential pivot top there. Okay, so previous resistance equals support, as we all know, under TA is going to be around the 6960 region, so that certainly needs to be respected on the daily chart. 60-minute chart now on the FTSE 100. Okay, again, previous resistance equals support around this 6970 region. We have broke out of this rising contracting wedge pattern. Obviously, the market was bearish and has obviously flushed thereafter. We've failed to hold a 6990 level. We've failed to hold a 6980. Again, yet to be seen. So 6980, 6970, solid support. If that gives way, then obviously we have to open up or be open to a fresh sell-off around the 6930 level, potentially the 200 MA as well. So this is going to be interesting as to the observation of the markets tomorrow. And there is solid support around the 6960, 6970, 6980 region. Okay, so we'll see exactly how this market plays out on the morrow. That's your 60-minute chart. Now 10-minute chart on the FTSE 100. Let's observe. Okay, let's see how this market is playing out. So you have solid support around the 6980 and the 6990 region on the FTSE 100. That has given way at present, so we are into the region here at 6960 support, and then we also have support at 6930 for the FTSE 100. Okay folks, so I think I'm going to wrap it up there. I've given you a technical insight and a fundamental insight as well, and like I said, the concerns over Yemen certainly have exacerbated the sell-off post Lockhart, post weaker durable goods. Okay folks, so risk on, risk off, wax on, wax off. Goodbye now.